Hello everyone and welcome back to another HPD fundamental analysis overview video starting on the 24th of March. Just like usual, we'll be discussing the previous week's news, quantitative and qualitative news, as well as the news that is due this week, and having a look at the currency indexes as well um, to share our biases. So with that being said, let's just move on to the United States dollar news that we gathered this week. So with retail sales higher than previous, lower than forecasted, and the core retail sales meeting the forecasted, which is quite good. So not the best but not the worst. So definitely could be worse news. Interest rate decision: the Fed decided to hold. Jerome Powell, the Fed chairman, repeats that the Fed are not in a rush to adjust borrowing costs. He stated that it will be challenging to determine if higher inflation stems from tariffs and by how much. Officials are penciling in 50 points to cut further in 2025, two-quarter rate cuts. So, regarding the rate cuts, I think that has been expected for a very long time, but definitely more confirmation on this. There's um, no mention of more rate cuts or fewer rate cuts. So definitely, um, you know, just going as planned. And still, he still there is uncertainty of the Trump's policies on inflation, and of course the Fed, um, having being mandated by inflation and unemployment. They need to definitely how we have targets for these indicators in order to make the decision to hold a cut or hike. The Fed has stated that it will begin shrinking its balance sheet at a slower pace starting next month, reducing the amount of bond holding it lets roll off every month, so slowing quantitative tightening. So, keeping it very simple, quantitative easing is a method to devalue the currency, whereas quantitative tightening is a method to appreciate the currency. Please excuse me, while there is no mention of quantitative easing occurring, definitely slowing quantitative tightening may result in less demand of the currency. So definitely something to look out for. Uh, with the euro, the ECB is unable to make firm commitments on interest rates due to elevated unpredictability over trade, according to President Christine Lagarde. Hopefully, I'm pronouncing her name correctly. While disinflation remains on track, the Eurozone is particularly exposed to shifts in tariffs. They still remain data dependent. So, pretty much the same message as last week. A lot of these central banks are still data dependent, and we're just really seeing they want to see the effect of tariffs, occurring to really make their mind up. ECB Governing Council member states an interest rate cut at the next meeting in April looks likely to occur. Currently, everything points in the direction of a cut in April, but still too early to say for certain. So we'll see. Definitely, we can see maybe um, signs of the euro devaluing because of this. We never know. But if there is news that contradicts this, then definitely we can see some more demand of the euro. Japanese yen, we had the meeting last week and we decided to hold. Prices rising quicker than wages. Banks profiting a lot from rate hikes. So with the interest rate being negative originally, now I believe they're at 0.5%. Definitely, there are articles saying that the banks have been making a lot of money, whereas normal people, civilians, are still struggling with the higher prices of inflation and the wages not accounting for the increase in prices, as well as the uncertainties over the U.S. and overseas trade policies are high. So um, definitely it is still difficult for them to judge. However, Bloomberg economists believe that another rate hike will come in May. Reuters says uncertainties would get clearer in early April after the implementation of tariffs. So definitely some news to look out for. The pound, not much news apart from the interest rate decision that they held, where it was expected for two, I believe out of the nine board members, two were expected to vote to cut. However, only one member actually voted to cut. So definitely sounds more hawkish than expected. The Canadian dollar, please excuse, I don't know why that A is coming up. Inflation rate 2.6%, a lot higher than forecasted in previous, and it's not just an inflation rate thing, core inflation, which is, it doesn't include, things like energy. 2.7%, much higher than forecasted in previous. Retail sales, however, with inflation being so high, I mean, they have cut a lot of basis points, so it is expected for. It's definitely not surprising that inflation has risen so high, also with tariffs as well. But the retail sales at minus 0.6%, where previously it was at 2.6 and forecasted at minus 0.4, and the core retail sales 0.2, minus 0.1, 2.9, definitely could be a result of the tariffs. I'd like for more of a confirmation from the central bank to state that before I say that for certain, but definitely retail sales have not as good. However, core retail sales 0.2% higher than forecasted, so definitely could be to do with oil and stuff. So we'll see. The Australian dollar, the central bank states that their stance on data dependence does not conflict with its continued monitoring of global economic reaction and uncertainty. Employment rate 4.1% as forecasted. Previous hasn't changed much. However, there has been 52,000 less jobs. Definitely a lot less than forecasted than previous. Move on to the New Zealand dollar. Not much news as well. The GDP growth rate quarter on quarter 0.7%. Forecasted at 0.4%. Definitely higher. They have even avoided a recession. So good growth in the economy for the New Zealand dollar. And the Swiss franc trade balance at 4.8 billion, whereas the forecast was at 5.01, which is a bit less than expected. And they did have an interest rate decision meeting where they did cut 2.25%. And lastly, not much news for the Chinese yuan and its economy. So moving on to, let's have a look at the this week's fundamental news, the quantitative news. So as I'm recording on a Monday, a lot of the manufacturing and services PMI for many countries has came out. With let me just go over the euro. So yeah, definitely a higher manufacturing PMI, lower services. However, these are still flash, so there's going to be a final reading as well. When it comes to the pound, lower manufacturing PMI but higher services PMI, and for the pound actually, for the British economy, services PMI definitely has more importance over the manufacturing PMI, and for the United States dollar, lower manufacturing, higher services. So definitely it's a trend there. With Tuesday, Bank of Japan. Core inflation, yearly inflation will come out. That will be very important, as well as Australian inflation and British inflation. With also the annual budget release of the pound, so definitely something to look out for. What else? We can see the United States dollar final GDP readings, which will be very indicative of the future of the Fed, what decisions they'll make. Retail sales for the pound, Canadian GDP, and also core PCE for the United States dollar, which is the Fed's preferred measure of reading inflation. And yep, that's for the news coming. And quickly having a look at the indexes, we can see that the United States dollar has rebounded off this level of price level. This is the last time price had reached this area was after the announcement of Trump's victory. So definitely it makes sense to see some a rebound of that. Definitely this is a good area to buy if you're long the United States dollar, or if you're shorting the United States dollar, you can definitely look. It's definitely a good area to short, or even I doubt they'll get to these highs, but you never know. Definitely, the euro. Yeah, ever since the German elections, the euro has shot up. However, now it's starting to go down, especially maybe with the economists expecting a rate cut in April. However, definitely something to look out for, and they're still have a lot of. Actually, no, they're going to hold for a while, a period of time before we start cutting again. So something to keep your eyes peeled. Japanese yen, definitely, sometimes it's not good. It's not the best thing to question every candle, but definitely it seems like the losses made today have been gained already. So we'll see. The pound, definitely still very expensive. The pound has appreciated a lot, and still haven't really mentioned much about the rate cuts. But last time I understood, they had 3 rate cuts planned. So we'll see how that goes. The Canadian dollar has been appreciating for a while, definitely at good levels, and with the Canadian dollar, you can really look to buy or sell the Canadian dollar because they're really at the end of their cutting cycle, and depending on the impact of tariffs and higher inflations, they might even need to raise interest rates to control inflation. So definitely that could be a reason to even buy the Canadian dollar, or if you are looking for, well, not looking for the downfall of the Canadian dollar, but if you're thinking that the tariffs are going to affect the Canada's economy negatively, then you can definitely look for shorts as well. Australian dollar, back to lows. Definitely, they are actually, we're still data dependent, and we're going to really not cut that much out of the central bank, so we can look to long. The New Zealand dollar, we still have a lot of cutting to go, and definitely this is this red area here is an area where prices attained many times. So definitely, it seems to be a very expensive area. So you can wait. I will be waiting to sell the New Zealand dollar once it reaches these levels. The Swiss franc, since they have cut rates, it's really time to see how inflation, will react to it. And the main goal of the Swiss National Bank is to devalue the currency. And whenever inflation readings are low, the Swiss franc, the value goes back up, and then most of the time it is the central bank that intervenes to devalue the currency. And definitely this is an area where the central bank has has intervened. So definitely that. And the Chinese yuan, really, we don't really trade the Chinese yuan, but definitely it's good to have a look at this to see how it affects the currencies such as the Australian dollar, the Canadian dollar, and the New Zealand dollar. But with that being said, thank you very much for watching this video. Please let us know anything you'd like to see, any explanations, or if you want us to go over our biases, further, please let us know. So with that being said, thank you very much. Also, please, I forgot to say at the beginning, but we are not financial experts. We are just traders that have a bias. These are just our biases. So please take that into account. Please trade safely. With that being said, thank you very much, and I hope you guys have a great week and a great trading week as well. Thank you.